Hello and welcome. You're watching Your Trades on ET Now with me, Snehisha, and with me is Priyanka Uppal. Priyanka, well, steady trading session coming in for us. Nifty did pretty well at open, but we've lost those gains that we did build up in the earlier part of the trading session. But nonetheless, Nifty has ended the day with an uptick of almost 34 points, 0.1% uptick. That's where Nifty is at. And we've shut shop just above the 22,400 mark at 22,402. So Nifty with an uptick of 0.1%. Nifty Bank also has ended the day higher with 0.5%. Broader markets today have done nominally better when it comes to the benchmarks. Small cap up almost 0.4%, and mid cap also was up somewhere between 0.7 and 0.8% at close. Now, when you take a look at sectorally, then sectorally metals were the biggest winner in today's trading session, up 2.7%, followed by PSC. Realty also did pretty well today in today's trading session. At one point, it was trading very close to its record high levels as well. Followed by pharma, finance, infra, energy, FMCG. All of these sectors have ended the day in the red. On the flip side, however, IT has been the top loser of the day, ending the day with cuts of 0.8%. And PSU banks and auto have also ended the day marginally in the red. But moving on to some individual stocks, then Aegis Logistics, MRPL, DCB Bank, SAIL, all of these have been winners from the broader markets today. And on the flip side, then Vodafone Idea down 9% on the back of a few brokerage notes coming in. Huhtamaki India on the back of a very poor set of Q4 and FY24 numbers. That stock was also down 7.5% today. Tata Consumer has ended the day with cuts of almost 5.5% on the back of its Q4 numbers as well. And you had Spark, Tata Elxsi, MCX also a set of numbers not so bad, but well weaker than what the street was penciling in. So MCX has also cut the day with ended the day with cuts of 4.5%. So largely this is what was the market roundup for the day today. But when you talk about some individual stocks as well today, you had a whole host of stocks that were in focus on the back of their Q4 earnings. One of them was Chennai Petro, and a stellar set of numbers coming in from Chennai Petro as well. Revenue has come in at 20,823 crores as well. So good set of numbers coming in, and they've also gone ahead and announced a dividend of 55 rupees per share. So that's what has aided the stock today. Tata Consumer, rather modest set of numbers coming in. On the other side, MCX had a weak set of numbers coming in. But Priyanka, what else were you spotting in today's trading session? Lots of newsmakers as well.
Lots of newsmaker, but Nifty, Snehi, the way you started now, in fact, Nifty, if you see, it's at a 1 week high today. Of course, there was a range
positivity, yes. Yes. It's always good to look at some positivity.
Of course, it was a range-bound session, and of course, this was indicated yesterday. Traders could anticipate that it's going to be a consolidation. It can be a range-bound trade because we saw a sharp crack on VIX, which is an indication that there would not be much of volatility on the either side, not even upside, not even on the downside. And that's what exactly we saw. 90 odd points of range, what we saw on Nifty. Banking stocks, especially large cap private banks stocks, they came back in trade. PSU stocks came back in trade today. Commodities, PSU, metals, mining, they were the highlights of the day today. But then talking about other stocks, exclusive info what we gather from sources that Tata Group starts preparation for Tata Capital's IPO, and that could happen by end of 2024 only. In fact, they've started shortlisting potential bankers also for the IPO. So this, in fact, whole space is to be watched out for. Another set of news which comes in, that comes from FSSAI regulator, since we saw the kind of crackdown which happened on Nestle. Now, what we gather is also that there can be scope of investigation extending to other companies also, apart from Nestle, companies like Dabur also. This is one set of information what we're covering, but defensives are back in track today. Pharma stocks we saw, they rebounded, largely Cipla rebounded on the back of a positive note. And yes, the eyes will be on the Nifty earnings tomorrow, which happens to be from Nestle, happens to be from IndusInd, Bajaj Finance and Tech Mahindra. That's what were the newsmaker and the top stories today. But then let's understand how to trade the market at this point in time when we have monthly expiry tomorrow. We have Ruchit Jain, lead research analyst at 5paisa.com. Ruchit, welcome. Welcome. Good afternoon. Let us know that how do you trade markets at this point in time? Because there was this anticipation largely on the cards that there could be neither of the sharp move on the upside and not on the downside. There could be a range-bound session for index. But then we did see that 22,400, 500, which was acting as a resistance. We were able to at least cross it for one point in time, but could not sustain it. How do you trade the index at this point in time?
Yeah, hi, very good afternoon. Well, if you look at the April series, especially the second half of the series, initially we witnessed that 1,000 point correction because of that no uncertainty in the global markets. There were index corrected from 22,750 to almost 21,750. Then, since last Friday, when we witnessed that gap down opening, we have seen a recovery in last 3 to 4 trading sessions. But the markets have retraced 61.8% of that previous correction, and this 20 to 400 to 20 to 500 zone where we are trading right now is a very crucial resistance zone for the index. Mainly, FIs have not covered their short positions. During that fall, they had formed significant shorts where their long short ratio reduced from about 57% to around 35%. And still, in spite of this recovery from the lower levels, the shorts have not reduced. The long short ratio still stands around 35%. Now, it will be crucial to see how they roll over these positions, whether they roll over more short positions or no, they cover or they let these short positions go during the expiry. But no, until we see a breakout about 22,500, I think the risk reward ratio is not that favorable to trade in the index or create fresh longs in the index. Yes, there is a lot of outperformance from the broader markets. You look at mid cap index, it's doing well. Small cap index, in fact, has been trading at its all time high, in spite Nifty is still not around its previous all time high levels, which clearly indicates that the buying interest is more seen in the broader markets, I mean, stock specific approach rather than trading the index. So I think index would still take some time. It would either see some consolidation, which could be a time-wise correction within an uptrend, and 22,500 would be the resistance, and 22,200 would be the support, and we might see some sideways movement within this range. But I think taking a stock-specific approach, no, right now is seems to be a better no trading strategy. And once we see a breakout above 22,500, then it's better to get into the index.
So thanks for that outlook coming in on the markets. But like you said, stock specific approach is the way to go. So guide us over here. Which stocks are you picking out amid a market like this? Where are you spotting value?
Couple of buy recommendations. No, first would be a buy call in Concor, where we have seen a falling trendline breakout today, which was supported by good volume. So I think the stock has already seen some consolidation, and we might see a next leg of up move resuming from here on. So Concor can be bought with stop below 955 for potential near-term targets 1010 to 1020 range. And Hindalco is the second pick. The metal as a basket has been doing quite well since the start of the series. In fact, I remember on the first day of the April series, it was the metal space which witnessed significant long built up. So I think that momentum has continued throughout the series. So no signs of profit booking as of yet. Hindalco, in fact, has surpassed its recent swing highs and with good volumes, and even we have seen a good build up in the derivative segment as well. So I think this outperformance within the metal stocks could continue. Hindalco could be bought even at current levels with stop below 622 for near-term target somewhere around 662.
Those two recommendations coming in from one of the space that was the highlight of the day. Thanks very much, Ruchit, for the recommendation and your view on the index. We'll let you go on this note. Now, Srishti joins in. Srishti, help us understand which are the stocks that you have spotted. I'm sure, again, a breakout day.
Well, yes, two counters on the breakout side, and both of them are from the broader market space. First of all, let's have a look at Chennai Petro, because this stock has hit its all-time high levels in today's trading session yet again. Definitely, it was on back of a good set of earnings, great dividend announcement. But other than that, what we have seen is that the stock was actually facing some resistance around that 1,000 odd level, but it managed to cross those levels as well. Today's move was when the stock exactly managed to take a bounce from its 20-day moving average, and then it was inching higher, and almost 18% gain for Chennai Petro at one point in time. So this is the first counter that we wish to highlight on the breakout side. Moving on to the next counter then, and that counter too is also a breakout stock, and Power Grid from the large cap space. The stock was holding strong, but what was interesting to see that just before, when the March fall started, the stock was around these level itself, but this is just a couple of candles, I believe, away from touching its high levels of March, at least in the coming sessions. That we have to definitely watch out for. But after a long consolidation around these levels, the stock managed to break above those levels. Today's move was after taking a bounce from its 20-day moving average, as well as a long build up on the derivative side. So these factors what we have spotted for Power Grid, and this counter was also one of the breakout stocks that we have spotted on the technical front. Back to you.
Well, Shrishti, thanks so much for taking us through both of those breakout counters in today's trading session. Let's hear it from the word of the wise today. And in our special segment today, Markets and Mandate, we had the chance to speak with Envision Capital's Nilesh Shah to take stock of how the markets are expected to fare amid the elections narrative. While we understood the impact of the elections and the unfolding of that on Dalal Street, it was also important to understand the nature of the BJP manifesto and the promises made. Amid all of this, where is growth headed for India? Here are Nilesh Shah's views on the same.
I probably don't think we should get into that wealth preservation mode. Obviously, wealth preservation always remains. You always try and protect your downside first. You always say what can go wrong rather than what can be possible on the way up. So that always remains. That mantra of trying to protect capital, trying to preserve capital, trying to avoid mistakes, trying to avoid losers, that should always be your first stepping stone. But I don't think we are done yet. I probably think the journey has only started. And the best way to look at this is what has the United States achieved over a very long period of time. So obviously along the way we will have to probably go a bit like the China way, we will have to go a bit like the South Korea way, we will have to go a bit like the Japan way in terms of creating our manufacturing capabilities and that helping that shift from farms to factories. That obviously has to be there. But eventually I think given the head start that we have in the world of technology, in the world of digitalization, the fact that we are a democracy, my view is that the template should be what United States has done over 50 or 100 years rather than what China has done over the last 10 or 20 years.
All right, very interesting comments coming in from Nilesh Shah. Here we stop for a short break. Once we come back, we talk more on the derivatives.
Hi there, welcome back. You're still watching Your Trades on ET. Now let's take a look at how the FNO space, the entire derivative space, has shaped up in today's trading session then. And let's start by looking at index futures trend for the 25th April expiry, which is tomorrow. Now on the Nifty front, we've seen some mild long build up, and on the Bank Nifty side, we've seen some short covering coming in, indicating a bullish trend or a bullish move lying ahead for both of these indices as well. When you shift focus and talk about India Wix, that came in at 10.2 today. A slight bit of a spike seen in India Wix today, roughly 1%, but this is nothing compared to the sharp fall that we did see in India Wix coming yesterday. Now, when we take a look at call writing, active calls for tomorrow's expiry, call writing has been seen at 22,500 and 22,600 levels as well, making 22,500 the resistance level when it comes to active calls. On the flip side, when we talk about active puts for tomorrow's expiry, some put writing has been seen at 22,400 as well as 22,300, making 22,300 the next support level to watch out for.
All right, absolutely. Snehi, if you notice, in fact, the support has also risen and the resistance level has also risen. 22,400, which was the resistance yesterday, no more resistance. In fact, there was a buying in on that strike. Now, the support has risen to, the resistance has risen to 22,500 and 600 now. But then Ashesha joins in now to tell us more on the front of earnings, the stocks which reported earnings, and how did they do during the day.
Yes, first up, let's talk about Chennai Petro. The stock was soaring in trade today, up nearly 16% on the back of very strong results that the company reported. Revenues were up 2% sequentially. EBITDA also saw a growth of about 53% on a quarter-on-quarter basis. And as far as margins are concerned, they came in at 5.9% versus 3.9% that the company had reported in the previous quarter. Apart from that, the net debt position also improved. Net debt declined nearly 20% on a sequential basis, and hence the stock was soaring in trade today, up nearly 50%. Moving on to Tata Consumer Products, then it reported its numbers yesterday post market hours. The stock was declining in trade, nearly 4.5% lower. India business organic growth came in weaker than expected, and that is why the stock was declining in trade today. CLSA meanwhile came out with a note where they are maintaining the underperformed stance on Tata Consumer Products with a target price of 1288, but all in all weak set of numbers, and hence Tata Consumer Products was also declining in trade today. Moving on to MCX then, this one was down nearly 4.5%. Morgan Stanley came out with a note where they are maintaining their underweight stance on the stock with a target price of 2,085. They say that the company missed EBITDA estimates by as much as 20%, and it missed PAT estimates by as much as 15%. So on account of weaker than expected set of numbers, MCX was also falling in trade today. Lastly, let's talk about Tata Elxsi. This one also reported weaker than expected set of numbers, where on a constant currency terms, revenue declined by about 0.6% versus expectations of growth of 2% on a sequential basis. And as far as margins are concerned, they were expected at 27.1%, but they came in just at 25.8%. So across the board, very weak set of numbers from Tata Elxsi, and hence the stock was down nearly 5% today.
Lashesha, thanks so much for taking us through that. And while Lashesha mentioned one stock that was down 5%, we do have another stock that was locked 5% in lower circuit today, and that happens to be transformers and rectifiers. But we managed to speak to their management today. They say that they aim to become debt-free in the near future. This is according to Jitendra Mamtora, the CMD at Transformers and Rectifiers. Listen in to what else he had to say about the company's expansion plans and the key levers for growth lying ahead. Listen in.
We intend to put up a facility for the fabrication of the transformer tanks, which are in shortage worldwide. It's not only in India, but throughout the world, people are facing the problem. The prices have jumped by almost 50 to 80%. We are putting up one automatic line for manufacturing, which will increase our capacity from 250 tons to something like 700 tons. And after establishing that and after maturing there, we'll put up another line within another 6 months. For this, we don't want to rely on the bank. We will infuse more equity in the company so that, we become almost debt-free. That's what our intentions are. The growth, the majority of the growth will come from the renewable. And we are now, trying to get into that business in a big way.
All right, moving on to another stock, which should be called a Dhamaka stock on the Dhamaka earning, what Snehi also said yesterday. But then today, we saw a little profit booking on Tejas Network that I'm referring to. Earlier today, we spoke to the management, Anand Atharya, CEO and MD, and Arnab Roy, COO and Executive Director for Tejas Network. What did they have to say on the numbers, roadmap ahead? Let's just listen to it.
We normally don't give guidance on margins, but we'll always strive to build better products, cheaper, and manage our expenses. Yeah, and that's going to be the focus of the company.
We see a good pipeline of business opportunities coming in the coming year. In India, of course, there are a lot of 5G upgrade opportunities which are there, as well as the expansion, the investments in terms of broadband, in terms of upgrading the backbone capacity of the private operators as they expand their broadband services and the 5G networks. So those are all great opportunities for us in India. Then there is BharatNet, which is again a very strong opportunity where we have very relevant products. That is just in India, but internationally there is a lot of focus in growing our business, and similar kind of opportunities of products where we leverage the broadband expansion that is happening in US, Europe, as well as the 4G, 5G developments which are peaking in a lot of the emerging markets across the world. So those are all great opportunities for us, which we want to leverage fully during this current financial year.
Yeah, so look, we don't normally give guidance, so I can't give you a number, but all you can expect is that we will continue to execute flawlessly. The supply chain is managed extremely well under good control. And then we have a healthy order book, so you can expect us to execute to that order book and add more to the kitty as we go.
All right, moving on to the earnings, which needs to be watched out for tomorrow, and one of them happens to be Bajaj Finance. Bajaj Finance are up in trade. In fact, all banking and finance counters were up, but majorly because before the earnings, and we remember the Q4 updates and last quarter best ever AUM. What do we make out this time? What should we expect from Bajaj Finance?
Momentum is expected to continue, Priyanka. Good set of numbers is penciled in both on the top line and bottom line when it comes to Bajaj Finance for Q4 this time around. Like Priyanka mentioned, updates were also very strong. So, but let's break down what the street is penciling in this time around. When you take a look at it from a consolidated basis, net interest income is seen at 8,077 crore rupees, which is an uptick of 29% on a year-on-year basis. Operating profit is also seen at 6,738 crore rupees, which is up 31.6% year-on-year. Net profit seen at 3,661 crore versus 3,157 crore, which is up 16%. So good growth being seen across these three parameters. But on the flip side, you have some slight contraction in NIMs that is being penciled in, because NIMs are now being seen at 10.3% versus 10.5%. So marginal cut coming in over there as well. Now on a sequential basis, when you take a look at asset quality, return on assets is expected to be excellent this time around, because that is being factored in at 12.6% versus 4.9% just last quarter. So that's a big jump coming in just on a sequential basis. However, on the flip side, when you take a look at return on equity, that is expected to be slightly tempered this time around, coming in at 19.6% versus 22% last quarter. Provisions are seen at 1,306 crores, which is up 4.6% on a sequential basis. Now, like Priyanka mentioned, when we spoke about the quarter 4 update, the company did say that FY24 AUM is expected to grow by 34%. Deposit book is also expected to grow by 35% on a year-on-year basis. So that is indicating some positivity coming in for the numbers tomorrow. But here's what we can expect from the numbers on an overall basis. NIM contraction likely to continue. Provisions are expected to rise nominally. Cost to income ratio will be remaining steady this time coming around. Credit costs are expected to decline marginally by 5 bips. Cost of borrowing is expected to increase as well. And lastly, what are the factors to watch out for? We'll be keeping a close eye on management commentary when it comes to growth trajectory, the asset quality in their unsecured portfolio, RBI actions on the EMI and e-com cards that they had taken earlier in the year, management succession and transition plans, and lastly, but the most important one, the listing plans of the company's housing subsidiary. So, well, we'll be keeping a close eye on Bajaj Finance's numbers tomorrow, but overall a healthy set of numbers expected both for the top line and bottom line.
All right, healthy set of numbers expected from Bajaj Finance. AUM growth of 35% could be a good mark again. Well, moving on to another major, FMCG major, which is supposed to post results tomorrow. We're talking about Nestle. Vinny is here joining in with all the details that how can Nestle, what should we expect from March quarter from Nestle in terms of number, the key comments to be watched out for, will it be a good show? What is actually Street expecting? Vinny, tell us.
So yes, in terms of numbers that are expected from Nestle, it's the March ended quarter. Do not forget that this time they're changing from calendar year to financial year. So yes, we are keeping the March ended quarter in focus. Standalone numbers, what we look at, 7% growth, a decent growth in terms of overall the revenue of the company, profits of the company, a strong growth, a double-digit growth of 15% for Nestle, while margins expected to see a sharp improvement, 24.1% versus 22.7%. So yes, around more than 150 basis points in terms of improvement in terms of the EBITDA margins of the company. Volume growth expected at 3 to 4%. So let's keep an eye out on that. This high revenue growth is because of the distribution expansion that they've been focusing on. They're focusing on the rural strategy as well. So those initiatives they've taken over there is something that could work out well for overall Nestle's numbers. Now we're keeping an eye out on the chocolate as well as nutrition segment. That's expected to see a steady growth. International business likely to see a bit of a decline there. While obviously in terms of margins, keeping an eye out on that. YOY, we're seeing an improvement. Sequentially, because we've seen those costs seeing an increase in, on a sequential basis, maybe we could see a reduction there. Now let's keep an eye out on raw material cost commentary. What are they seeing in terms of the pricing going forward? Other than that, commentary is going to be important in terms of the rural players. How is that shaping up? Rural versus urban and regional players is key to watch out for. And any special commentary on the baby food segment, you know, given that there were concerns around the sugar in the food content, that is something key to watch out for from Nestle.
Well, yes, we'll be keeping out a close eye on Bajaj Finance and Nestle, as well as the two other Nifty 50 earnings that are expected to come out tomorrow, Tech Mahindra as well as IndusInd Bank as well. But viewers, with that, it's curtains down on this edition of Your Trades from Priyanka.
Let's not forget, Snehi, in fact, not just earnings here, in fact, US mega cap earnings also today.
Well, yes, lots of important earnings coming in. Microsoft, Alphabet and Airbus from the US will be reporting its numbers as well. So Priyanka will be watching out for those numbers as well. But for now, it's time's up on this edition of Your Trades. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.